A government minister authored a letter in November 2020 purporting to write off 92.4 billion shillings in import duty on steel products from January 2005 to June 2020, NTV has learnt. The import duty of 10% on steel products, including hot-rolled coils and wires made from alloy steel, is part of the common external tariff imposed by all the members in the East African community. In a 4th November 2020 letter to the Secretary General of the East African Community Secretariat, Mr. Kahindo Otafiire, in his capacity then as East African Affairs Minister, cited Section 133.2 of the East African Community Customs Union Management Act. He argued that the tax arrears be remitted on account of difficulty of collecting them, adding this is to submit to you Uganda's request for a remission of duty amounting to 92,406,780,938 shillings for the period starting January 2005 to June 2020 on account of undue difficulty to collect the tax arrears and the impact it will have on the steel manufacturing sector's competitiveness. This request, which is yet to be approved by the East African Council, is supposed to be tabled in the East African Parliament based in Arusha. If there is agreement, its passing will climax in the issuance of a legal notice in the Gazette for the waiver to take effect.
I don't have the authority. That's not my mandate. That's not my mandate. I'm Minister for Internal Affairs, not Minister for Trade. Maybe if I did, that was when I was Minister for Commerce. So now you don't ask me what happened 14 years ago, ask the current minister.
Minister Otafiire argues in the 2020 letter, a copy of which NTV has seen, that the manufacturers of steel products in Uganda have been importing hot-rolled steel coils and wires of alloyed steel, which ordinarily attract an import duty rate of 10%, as non-alloy steel coils and wires, therefore paying no import duty. Subsequently, the taxman issued demand notices to the steel manufacturers amounting to 92,406,780,938 shillings, arising from inadvertent misclassification of hot-rolled coils and wires made from alloy steel. Hot-rolled coils are intermediary products used in steel shelving, storage tanks and doors, shipbuilding, receptacles for compressed gas, tubes, piping, and construction, amongst others. Minister Otafire's letter, however, appears to be a flawed approach in terms of seeking a tax waiver as set out in the East African Community Customs Union Act, a mandate which is given to the Commissioner in charge of customs. Section 133.2b reads, where the Commissioner is satisfied that the whole or any part of duty or tax due under this Act from any person cannot be effectively recovered by reason of the impossibility, undue difficulty, and excessive cost of recovery, he or she shall notify the Council in writing, who shall consider the matter and with the approval of the East African Legislative Assembly, remit or write off, in whole or in part, the duty. Andrew Chambade Mukasa, a lawyer and tax expert at Godina Associates, says misclassification is part of trade misinvoicing, which is rife.
So there's, I'll take you just back to 2018. There is a study that was conducted globally and what they call illicit financial flows projects by the Global Financial Integrity. And it was established that one of the ways through which revenues are lost is trade misinvoicing. And this, in a way, has an effect on classification of the items. For simplicity, classification is if I get a pen and it is a blue pen, the code or the classification law will tell me that a blue pen attracts duty of 10%. The same law will tell me that if it is a red pen attracts a duty of 0%. It means the onus is on me as the taxpayer to make sure that I tell you the right thing and the laws are available. So if I come and tell you that this is a red pen, yet it is a blue pen, and URI also accepts it as a red pen and therefore takes 0% than a 10%, you see the misclassification effect is we have lost the would-be 10%.
Mr. Mukasa proceeded to explain the implication of the anomaly.
Of course, URI has a duty to make sure that every revenue that is due to any taxpayer is collected. And that duty, 2005, maybe our technology was not as good as it is now. So then I can link that to capacity. You might not have enough staff to come and audit every taxpayer who is importing. So at times you find some things go because of the capacity.
In response to the demand notices, the Uganda Steel Manufacturers Association wrote to the Commissioner of Customs in July 2020 to request a stay of application of the EAC Common External Tariff and a duty rate of 10%. If Uganda imposes the EAC Common External Tariff of 10%, Uganda's steel factories shall be subjected to unfair competition from their counterparts in the EAC, as Kenya stays application to some of the above tariff lines, whilst other countries applied for duty remission, the association reasoned, adding, this will lead to capacity underutilization, reduce exports, and subject Ugandans to higher prices, as well as risk jobs in Uganda. But Mr. Mukasa is dismissive of what he terms as moralistic arguments not anchored on the law.
That's more of a moralistic argument. The point is there a tax? And is that tax due or is it payable? Was the tax... So the questions of whether it is going to make your life harder before, after, is really a different question, because fairness in taxation as a canon of taxation is if we all fall within a particular spectrum of income, then we should all pay the same kind of tax. So if we are all importers, say steel, and the law says this is our tax, and another importer say of motor vehicle and this is our tax, then we must all fit within the same and pay the tax that is due. So the correspondence is you've seen where someone says, please, I'm going to be disadvantaged because my friend in Kenya is like that. The question would be, what was the existing law at the time? And was the law saying in Uganda that that tax is not payable, or it was saying the tax was payable? Now, before you make that argument, then you question the law in Kenya. So the balancing, the moralistic way of saying it's going to make me bad off cannot stand, and it's not tenable.
In applying for remission of this import duty, Mr. Otafiire in his 2020 letter cited Section 133(2) of the East African Community Customs Management Act 2004 that stipulates where the Commissioner is satisfied that the whole or any part of duty or tax due under this Act from any person cannot be effectively recovered by reason or impossibility or undue difficulty or excessive cost of recovery, he or she shall notify the Council in writing, who shall consider the matter and then, with the approval of the East African Legislative Assembly, remit or write off in whole or in part the duty. Mr. Mukasa points to the ambiguity of the law as an enabling factor.
The undue difficulty would be a question of fact. Sadly, the East African Community Customs Management Act does not define what undue difficulty is. So definitely we go to the normal English of undue difficulty. As a tax lawyer, it might not be my duty to interpret the law. My duty is to apply the law and persuade the one who is supposed to interpret it as the court. But looking at the law strictly, you might have challenges finding what undue difficulty is. So it's an umbrella that can be taken advantage of either by the taxpayer who wants the tax to be remitted, or by the government that maybe wants to have a favor of a particular sector to the other. But the point would be, to whose detriment? It is to the detriment of omuntu wawansi, the local person who expects to get a service.
A document from a source revealed that at the beginning of July 2020, a few companies paid an import duty of approximately 3 billion shillings for hot-rolled steel coils, although a majority of firms dealing in the steel sector did not pay any taxes for the imports. Mr. Mukasa says a tax system that is selective is flawed.
But a person who is around, your taxpayer, you have a team. They file a return every year, you know their factory. Where is the unduly difficult? So this application of these laws by the state players, we need to be conservative in a way so that we make sure that the tax system is fair, because if you're going to remit for certain groups, then what about other groups?
By November 2020, importers who had earlier paid import duty in July 2020 halted meeting their tax obligations. Close to 900 declarations were made to URA between October and December 2000. An import duty of approximately 6 billion shillings was not paid, reads the document from a source who preferred anonymity. Mr. Mukasa says the tax arrears should be collected, the application for remission notwithstanding.
The right thing to do is URA needs to go ahead and collect this tax because it is due. The law does not say that when the commissioner, and like you're saying, it is the minister who wrote, there's a problem there. But the law does not say that when the commissioner writes a letter, then there is a stay of collection. The law puts an obligation for someone to write, and the council needs to come up with a decision. So without that decision, it means this tax is collectible. The questions would be, why are we not collecting this tax?
NTV reached out to Mr. Abel Kagumire, URA's Commissioner of Customs, for comment, and he declined to comment. Tax compliance in the steel sector in Uganda has been the subject of an ongoing public debate. During a plenary debate on March 15, 2017, the 10th Parliament passed a motion to investigate tax evasion in the steel sector. The motion tabled by the Bokoli North lawmaker Gasta Mugoya revealed that misclassification and under-declaration of imported steel products in order to evade tax was rife in the sector. Then Deputy Speaker, the late Jacob Olanya, referred the matter to the Committee of Finance, Planning and Economic Development with terms of reference that included investigating allegations that companies in the steel sector evade taxes, resulting in substantial revenue losses. 6 years later, the inquiry is yet to commence.